This is part 2 of insurance valuation management for strata and commercial buildings. So earlier on we looked at insurance valuation. We'll go over that again now. What is an insurance valuation? That's fine. We've gone through the critical elements of what the body corporate or the owner's corporation needs to do. We looked at the case study, and now what we'll do now, we'll go into one of the sample reports. So we'll go through a report to see what that looks like. Okay. So this is a standard building. What's it? 1, 2, 3, 4, 5, 6, 7 levels. So we'll have a look and just see what's in here. So these are some of the items that are in a insurance valuation. So 3 basic sections. Where is your insurance valuation summary, base of your insurance valuation report, and also your report notes and site photographs. So this is a sample report, which is the building consists of 15 units with car parking areas, and the replacement value for this building is $4.6 million. So we'll have a look from the basic construction cost to the replacement cost, where there's going to be a big difference between the two. Okay, so where we're looking at in the insurance valuation is looking at the critical aspects and what we need to do. So the first thing we need to do is determine the replacement value of the building. That's fine. So make sure it complies with all the regulations and the bylaws since the date of construction. So maybe the updating of the fire panels or all the different regulations for that sort of building at the same time. Okay. Loss of rent and emergency accommodation. So this is where we're talking about in the event of a fire, is there not enough money to look after for a 104-week period, which is 2 years. Okay, so the next thing we look at is current trends. Depends on when you do a review of a insurance valuation once every 5 years, then the insurance valuation keeps up with your building rates and the changes in legislation for either, say, removal of debris and getting rid of the stuff from site, as well as the normal construction site of a building. So this is one of the other items that we need to look at. So this is when we're talking about periodic review. So once every 5 years we're supposed to do a review of the insurance cover to make sure that's up to date with everything. Okay, so we're looking at the elements that we use in calculating the building replacement value. So the present building costs, we allow for the cost escalation while the tenders and everything come together, the professional fees, the removal of debris, and then the cost escalation from when the initial planning went ahead towards the final completion of that of the building. So as we saw in this building here, we had 26 months from going from stage 1 to its final stage. So there's a fair bit of a gap in between here. So the original quotes you got to replace the building back here is going to be different by the time you get to this stage, especially after you've got nearly 2 years that have gone past. Okay, so what I might do, I'll stay on that section from there. No, I won't. I'll go through here. Okay, so if we look at this initial section from here, so we're saying total build cost is $3.2 million, but by the time you go through your cost escalation, you've got your fees, removal of debris, that's where it goes up to 4.6. So you can see 3.2, there's about $1.2 million extra from your normal build cost to just to rebuild the building, as opposed to all these extra cost periods in here. So we'll look at that in the next section because we'll run out of time on this one. Okay,